Okay, so you're ready to start investing in the stock market. Good for you, but you don't necessarily know where to start. You look up a stock on the website and it gives you all this information and you have really no idea what any of the numbers mean. Well, let me try to help you out. My name is Zaldy with Strategic Wealth Designers, and this is a stock analysis report simply explained in less than 5 minutes. Okay, full disclosure, it's actually 7 minutes because there's a lot of information, but I promise it goes fast and it's all very important. All right, here we go. So a stock analysis report is a tool that a lot of investors use to determine whether or not a certain stock is a good buy. You can have access to these from many different websites, but for this example, let's use this report from stockanalysis.com. So one of the most popular stocks that people like to invest in is Apple. So we'll use that here as our example. So right away at the very top, you see the company and its ticker symbol. In this case, Apple's ticker symbol is AAPL. A ticker symbol is just a quick way to identify a company's stock since some companies have pretty long names. Underneath the name, you'll see NASDAQ, which is the stock exchange that Apple is being traded in. The NASDAQ and the New York Stock Exchange are the two main stock exchanges in the United States. The IEX real-time price means that the numbers you see are being updated live. And the USD shows the currency that's being used. In this case, it's the United States dollar. All right, now let's get to the numbers. This first big number you see is the current price per share, which means how much one share would cost you if you decide to buy it. So in this case, one share of Apple would cost you approximately $160. The green number you see next to it is how the stock did today. Now in this case, Apple's stock rose $2.36 from when it started, which is a 1.5% increase. Now keep in mind this number isn't always green. Many times you'll actually see this number as red, which means that the stock price is lower than when it started when the market opened. All right, so let's move on to the nitty-gritty details here. First up is the market capitalization, or market cap. In short, it's a way to determine the size of a company compared to its peers. Apple's market cap is $2.5 trillion, much bigger company than their competitors like Dell, which has a market cap of $30 billion. Revenue is how much money the company has made from its stock sales, while net income is the revenue minus the total expenses. By the way, the TTM you see here, it just stands for trailing 12 months. It just means the number you see is the performance based off the last 12 months. All right, moving down the line, shares out means how many shares are available to be traded in the market, not including shares held by the company. EPS stands for earnings per share, and it's a metric used to measure how profitable a company is. A higher EPS means good financial strength and stability. So you compare the EPS of Apple to Microsoft, and this number would tell you maybe Microsoft could be a little bit more profitable. PE ratio is a big one people use. It means price to earnings ratio, and it's used to measure the value of a stock. A high PE ratio could mean a stock is overvalued and the market expects the company to grow at a high rate. On the flip side, a low PE ratio could mean the stock is undervalued and could be a good value investment. If you're comparing stocks and stock A's PE ratio is way higher than stock B, then tread lightly, because if that stock fails to meet expectations, the price could go down, and so will the ratio. Now, a forward PE ratio uses a stock's estimated earnings and provides a more forward-looking perspective on the company's earning potential. In this situation, Apple's forward PE is lower than the regular PE. This means that the market expects the company's earnings to increase in the upcoming year. A lower forward PE ratio actually attracts investors who are seeking to invest in companies with strong growth potential. All right, up next are dividends. This is basically money a company will give you just by holding their stock. For this example, Apple has a dividend of 92 cents. That means for each share you hold, you'll receive a payment of 92 cents. So if you hold 100 shares, you will receive $92 as a dividend payout, which usually happens about 4 times a year. However, you have to be invested before a certain date, which is where the ex-dividend date comes in. For example, if you buy the stock on or before February 10th, 2023, then you'll be entitled to receive a dividend payment. All right, well, that was half of the report, but believe it or not, the hard part is over. The rest of the report is actually pretty straightforward, so let's keep it going. All right, volume. Volume is a big one a lot of investors look at. This is the total number of shares that a stock is traded during a specific time. So in this case, nearly 23 million shares of Apple stock was bought and sold in this day so far. Now, to analyze volume, investors usually figure out if a stock is being traded higher or lower than normal. This is where you compare the volume of a stock on other days to see if you can find an average. Day traders and short-term investors prefer higher volume because that means there are many buyers and sellers in the market, making it easier to buy and sell shares without really affecting the price. Long-term investors, on the other hand, may prefer lower volume because it's less volatile and more stable. All right, the number you see next to open is the stock price when the market opened at 9:30 a.m. Eastern Time. Then the previous close is what the stock price was when the market closed at 4 p.m. Eastern Time in the previous business day. The day's range gives you two numbers, the lowest price and the highest price the stock was able to be traded during the entire trading day. Meanwhile, the 52-week range gives you two similar numbers. It gives you the lowest and the highest price the stock was able to be traded in the past 52 weeks, or let's just say a calendar year. Moving on to beta, which is the measure of a stock's volatility in relation to the overall market. Anything greater than 1 suggests that the stock is more volatile, while anything less than 1 suggests a less volatile stock. Now, depending on the resource that you use, some reports will have an indication from their analysts on whether or not the stock is a good buy. And they'll also list the price target that the analysts think the stock will get to. All right, lastly, the earnings date displays the next time the company will release the financial results for a specific period. Most stock analysis reports will also have interactive charts that supplement these numbers. These charts just basically show the price action of the stock, and you can choose a time period ranging from 1 day to a month to the last 5 years. And this can give you a visual idea of where the stock was at the start of the time period compared to where it is now. All right, that wraps it up. Obviously, there's just so much more information that these reports can give you. So if there's anything that you want to learn about, if you have any questions, feel free to write that in the comment section and we'll make sure to do a video about it. Until then, we'll see you in the next video.